Hello friends. Today in this video we will discuss on how to save taxes on sale of house property. We will explore the provisions that the Income Tax Act itself provided for saving taxes. These provisions ask you to reinvest into another capital asset for the purpose of saving taxes. So let's explore what are these exemptions on reinvestment. Now let's talk about exemptions on reinvestment, one of the important topics in capital gains on house property. Now, exemptions on reinvestment has four main sections relating to house property. Section 54, 54B, 54EC, and 54F. The basic funda of exemptions on reinvestment is basically when you sell a capital asset, you get a gain. You reinvest that gain or the consideration into a new capital asset, specified new capital asset. And if you reinvest that, then the capital gain that you got from the original asset would be exempted. Whenever you're reading these provisions, you have to look at four main provisions. One is what to reinvest. Second is when to reinvest. Third is what is the limit of reinvestment. And fourth is what happens if you sell the new capital asset early. So coming to section 54, 54 says long-term capital gain from sale of a residential house property. What to be reinvested? The gain that you get from the sale of the residential house property, the long-term gain, that needs to be reinvested in the purchase or construction of one residential house property. Now, there is one exception, that is you can make an investment in two residential house properties in India if the amount of the gain does not exceed 2 crores. And that option can be made only once in a lifetime. Second is when to reinvest that. When to reinvest, you sell it today, then you can reinvest that gain either 1 year before the date of transfer or 2 years after the date of transfer if you are purchasing a residential house property, and 3 years after the date of transfer if you are constructing a residential house property. Now, what is the maximum limit that you can reinvest? It is 10 crores. So if you have a gain of a long-term capital gain of 20 crores and you reinvest 20 crores, then it will be limited to 10 crores exemption. Then we should look at what happens when you sell the new residential house property within a period of 3 years from the purchase or construction of the property. So let's say you reinvested in a residential house property and you sold that new residential house property within 3 years from the date of purchase. Then whatever capital gain that you would compute for the sale of the new asset, take that cost of acquisition for that, and you reduce the capital gain that was exempted for the sale of the original asset. Then the last point is, if the amount in the capital gain account is not utilized within the time period. Now, capital gain account means it says when you sell a capital asset today, when you sell a residential house property today, and you have time to reinvest that amount in 1 year before or 2 years after or 3 years after if it is construction, which means by the time you file your return of income, it has not been completely reinvested. So what the provision says is you put that amount in a separate bank account, which is called the capital gain account scheme. So whatever amount you put in that account, that will be considered as a exemption for the purpose of that financial year when you sold the asset. Now you have to reinvest that amount that you have put in the capital gain account within the time period. Now suppose the time period ends, that is 3 years from the date of transfer ends, and there is some amount remaining in that capital gain account, then that amount that is remaining in that account, that would be taxed in that year under the head capital gain. In that year meaning at the end of the 3 years. That is section 54. 54 deals with long-term capital gain on sale of residential house property. Coming to section 54B. 54B talks about long-term capital gain or short-term capital gain on land that is used for agricultural purpose. Now, what is the condition? What are you selling? You're selling a land. Let's say you have a land in a city that you or your parents have used for agricultural purposes for at least 2 years immediately preceding the date of transfer. If that is the land that you're selling, then what needs to be reinvested? Whatever gain that you are earning from the sale of that land, that needs to be reinvested in the purchase of another land, which is purchased for being used for agricultural purposes within 2 years from the date of transfer. Then what happens when you sell the new land? If you sell the new land within 3 years of purchase of the land, then again it is similar to section 54, wherein it says whatever the capital gain that you are computing for the sale of the new land, the cost of acquisition has to be reduced with the capital gain that was exempted for the original land. Then this amount, the capital gain account scheme, it is the same provision as was for section 54. Only difference is if the amount is not utilized within a period of 2 years from the date of transfer, then it will be taxed in the year in which the 2 years expires under the head capital gains. That is section 54B, long-term or short-term capital gain on land which is used for agricultural purpose. Then moving on to section 54EC. 54EC talks about long-term capital gain from the sale of land or building. Now here, what needs to be reinvested? The gain. The gain, long-term gain from the sale of land or building has to be reinvested. It has to be reinvested in what? It has to be reinvested in bonds. Now, NHAI and RECI are two corporations which issue bonds, which are 5-year redeemable bonds. If you invest the gain in these bonds within a period of 6 months from the date of transfer, then the capital gain becomes exempted. Now, the limit is whatever capital gain that you earn from sale of land or building during one financial year cannot be reinvested more than 50 lakhs. So if you have a long-term capital gain of 60 lakhs total aggregate from land or building, then for that financial year, if you want an exemption under 54EC, you can only reinvest 50 lakhs. To get maximum 50 lakhs exemption can be gained. Then what if you sell the bonds early? Early means what? Early means 5 years. Where the bonds are transferred or converted into money within 5 years from the purchase of the bonds, then the capital gain. Now, this is different from the other section 54, 54B because the capital gain that was used to purchase these bonds will be taxed as capital gain in the year of sale of bonds. So the difference is that in 54EC, if you sell the bond within 5 years, then the capital gain would be taxed in that year in which the bond is sold, the capital gain that was exempted. Unlike section 54, 54B, wherein the cost of acquisition in the computation of the new asset will be reduced by the capital gain that was exempted. Okay? Now, this provision says where the bonds are transferred or converted into money. Now, what does converted into money mean? Converted into money means, let's say you have purchased the bonds. Now, you have the bonds and you take the bonds, go to the bank, keep the bonds as security and take a loan against those bonds. If you take the loan against the bonds, it will be considered as converted into money. And the capital gain would be taxed in the year in which you converted that into money. Okay, that is section 54EC, long-term capital gain from land or building reinvested in bonds, NHAI, RECA, 5-year redeemable bond. Moving on to the last section on exemptions on reinvestment, section 54F. 54F talks about long-term capital gain from any capital asset other than residential house property. Why other than residential house property? Because long-term capital gain from residential house property has already been given in section 54. So 54F says long-term capital gain from any capital asset other than residential house property. What needs to be reinvested? Now, this is different from other section 54s because the net sale consideration has to be reinvested, not the gain. The net sale consideration to be reinvested in purchase or construction of only one residential house property. When it needs to be reinvested, that is similar to section 54, 1 year before the date of transfer or 2 years after the date of transfer, or 3 years if you're constructing a residential house property. What are the conditions? One condition is on the date of transfer, the taxpayer does not have more than one residential house property. So let's say you sold gold, you got 20 lakhs of long-term capital gain. When you sold the gold, you have only one residential house property and you're reinvesting that gain, the sale consideration, in another residential house property. So you can reinvest it in a second residential house property. So if you already have two residential house properties and you're reinvesting it in a third residential house property, then the condition will kick in and you cannot use Section 54F. Second condition is that taxpayer does not buy more than one more new residential house property within 1 year of the date of purchase of the reinvested house property, or constructs a residential house property within 3 years from the date of the purchase of the reinvested house property. Basically, this restricts a taxpayer from getting another new house property after it has reinvested in a new house property. Within 1 year, if it is a purchase, within 3 years, if it is a construction from the date of purchase of the reinvested residential house property. The limit is the same as Section 54. Maximum exemption limit is 10 crores. Now, how would you compute the exemption on the capital gain if you are going to reinvest in a residential house property which is less than the net sale consideration that you have received in the original asset? So let's say you got a net sale consideration of 1 crore, you reinvested 80 lakhs into a new residential house property, and the capital gain that you had earned in that 1 crore property was 40 lakhs, let's say. So how much of those 40 lakhs will be exempted if you are only reinvesting 80 lakhs of the net sale consideration? It will be 40 lakhs into 80 divided by 1 crore. That is 80 by 100, that is 80%. So the exemption on the gain would be 80% of the 40 lakhs. Now here also, this is similar to Section 54 EC. If you are selling the new residential house property, within 3 years of the purchase, the capital gain exempted will be taxable in the year of sale. Now, this is one point that needs to be understood. One is, this is an interesting thing. Taxpayer, this is a situation, let's say, taxpayer sells a capital asset in year 1 and reinvests it in a construction of a residential house property. So it has 3 years to construct a residential house property. It is reinvesting it in one more residential house property. Now in year 2, in the next year, the taxpayer again sells another capital asset and it reinvests the sale consideration into the same construction of the residential house property. So in year 1, it took Section 54F exemption. It reinvested the sale consideration into construction of a residential house property. In year 2, it again sold another capital asset, reinvested that sale consideration into the construction of the same residential house property. Can it be allowed? Can Section 54F used in year 2 as well? The answer is yes, because all the conditions are getting met. Even in year 2, if you're selling a capital asset, you're taking the sale consideration, you're reinvesting it in the construction of a residential house property, you will get the exemption. Thank you so much for watching the video on capital gains on house property. If you have any views on the provisions that has been mentioned in the video, please do put it in the comments below and we can engage. If you genuinely like the video, please do hit the like button, share it with anybody who you think would benefit, and please subscribe to the channel. Lastly, if you want this presentation, then I have provided my email ID on the description below. Please do drop me an email. Thank you. Bye.